Oh, gosh. Well, I think I got away. Debbie decided we had to go on a diet. She was going to die. I was going to die. So here I'm out in the woods foraging for nuts and berries. Listen, next week when I get there, you guys better have some pizza or some barbecue or something out there. Oh no, she found me. I gotta go.
Hi, I'm Debbie Bennett.
And I'm David Bennett with Financiers Mortgage Group.
And welcome to our video update for the week of January 27th, 2012.
Now don't forget that Financiers is the place that
For free,
will help your customers improve their credit scores so they get the interest rate and the loans they deserve. If you've been following our daily updates, you saw that December turned out to be a very surprising month. Home sales were up all over the country. 39 states saw sales increases of 3 to 15%. And that's on top of a pretty good Christmas season. Only one state showed a downturn, and that was minor. You don't know about our daily updates? The link is right over there. And here's some more good news. The BJ indicator is way up. What's the BJ indicator? Only the most accurate one there is out there. It's the Barrett-Jackson indicator. Now Barrett-Jackson is a collector car auction house, and they sell some of the finest cars in the world. Turns out car buyers and car collectors have ended up being a very good barometer to the economy and how people are reacting to it. The Scottsdale auction, and only the Scottsdale auction, has mirrored the economy for decades. They have a Las Vegas and a Palm Beach auction, but they don't have the history and they're a completely different clientele. Well, the Scottsdale auction is held in January. For quite a while now, it's giving you a good indication of how the rest of the year will go. If the success of the sale this past weekend is any indication, then people are finally feeling pretty good about the future because they were out in droves and they spent like crazy. So let's look at the history of their numbers. Now up until 2008, the numbers were increasing rapidly. Then in 2008, they stabilized or maybe dropped just a little bit. They had to work a lot harder to maintain their numbers. They dropped quite a bit in 2009 and 2010, had a minor uptick in 2011. Enter 2012. In 4 days, they had sales over $92 million, which is a 32% increase over last year. They also had a record number of attendees. They were up 16%. Now for the past 3 years, people attended, but they sat on their hands. This year, they're waving them in the air and bidding. This year, over 50% of the bidders were brand new first-timers. There's new blood in the water, and they were in a feeding frenzy. So maybe 2012 really is going to be a much better year than 2011, like they say. In a lot of ways, people are beginning to act normally again. But this means the market is heating up. And if you don't refinance soon, you're going to lose these low rates. So why don't you hit the pause button? It's a little button with the 2 vertical lines right down there. Give us a call, then we can finish this video afterwards. Go ahead, it won't take long to find out how much money you're going to be saving. Because there have been so many changes lately, let's talk about mortgage insurance. Every loan has it in one form or another, and you need to be aware of how it affects the loans, the rates, and your customers. Now don't worry about trying to remember all the details. I've got it all for you right over there. I've even got to have notes for some of the numbers. Now conventional calls it PMI, FHA calls it MIP, VA calls it a funding fee, and USDA, yes, USDA now has MI, they call it an annual renewal fee. So mortgage insurance is basically an insurance policy. It reduces the risk to the investor and to entice them to loan money at a lower down payment level. So that's what makes possible the 90%, 95%, 96.5%, and even 100% loans. Without MI, you'd have to put down at least 20%. Before there was MI, an 80% loan meant you put down 80%. So MI is good, but MI has gone through a lot of changes over the past couple of years and even over the last couple of months. So let's do a little update. Let's begin with VA because it's the simplest. They charge an upfront fee, but they charge you no monthly fee. They do vary it. Your first loan, they charge you 2.15%, and any subsequent loans, they charge you 3.3%. If you'll put 5% down, they only charge you 1.5%, whether it's your first loan or a second one. And if you put 10% down, they drop it to 1.25%. Now USDA is the next simplest. They have an upfront funding fee like VA plus an annual fee paid monthly. Actually, they charge it to you annually, and you can decide to pay it annually or pay it monthly. USDA recently lowered their upfront fee from 3.5% to 2%, but that's when they added the 0.3% of the annual renewal fee. Now, conventional is the simplest and the cheapest. They have no upfront fee, and the MI varies by the loan to value. A 95% loan, they charge you 0.94%. A 90%, they only charge you 0.62%. An 85% loan, they only charge you 0.38%. FHA is the most expensive. They've also decreased their upfront fee and raised their monthly fee. Now, they used to have an option where if you put enough money down, you wouldn't have MI. Now, all FHA loans have MI. FHA now charges you 1% up front and 1.15% per month. I hope this helps you understand, but call us if you or your customers have any questions. We've given you our cell phone numbers, and we actually answer the phones after hours on weekends and on holidays. We want to answer your questions when you have them, not days later after a buyer or sellers imagine things to be much worse than they really are.
Well, that wraps up this edition. Please share this video with your customers and colleagues.
And don't forget, you get daily updates and subscribe to the video right over there. Now, before we go, there's one thing that bears repeating from last week. Financiers only had a 4% turn down last year, which is 10 times better than the national norm. Now, with your sales being fewer and further between than in years past, can you really afford to risk it with a regular lender? Call us. You'll be surprised with the service, how well we stay in contact with you, and of course, you'll just love to have more loans closing.
And as always,